Trading doesn't have to be difficult or time consuming. In fact, you can make a great return from trading set and forget strategies from little as 10 minutes a day. That's the way of the lazy trader. See for yourself now in this example of how easy and effortless trading can be. That's lazy trading.
Hi there, it's Rob from The Lazy Trader. Hope you're well. Just want to talk to you a little bit about pound CAD, this cross-currency pair. We've got a potential sell set up on the horizon, although it's not quite cooked yet. I just want to talk to you a little bit about why it's looking bearish. I mean, admittedly it's not the best technical setup we've had, although it is valid, and I'm going to tell you exactly why. So without further ado, yesterday, Monday, closed as a outside bearish pin bar reversal. Take out the high and the low of last Friday. That in itself is bearish. It's testing this old level of support as resistance, which once again is a bearish signal. Furthermore, from the initial move downwards here of this trend line, intersected on the 4th of November, this succession bearish pin bar reversals equates very nicely with the 50% Fibonacci retracement. Furthermore, we can reasonably expect this horizontal level here to represent the top of what could potentially form as being market oscillation, or this currency pair just moving sideways in a rectangular fashion, very much like it did here between September this year and of course the 11th of November this year. It's just been broken through the previous range, like we saw here, forming from February this year to August this year, broke through it, made a new low, then oscillated, moved sideways into a rectangle, treating this level of support and the original rectangle as resistance. And we feel that based on what's happened before, it's likely it's going to happen again. So we could reasonably expect this to form into a rectangular box. The stochastic looks like it's just about to cross from overbought, crossing over that 80 line. So we are looking to potentially trade the break of Monday's low, minus spread, minus that extra pip, with our stop loss above Monday's high, as this could potentially represent the top of a rectangle which could form over the next coming few weeks. But we're not quite ready yet, unfortunately. The reason why is this: we always look for time frame correlation on the hourly time frame. We can see here that on the hourly time frame we're making a steep upward trend here. What we don't want to happen is be triggered in to what is essentially a sell setup on the daily time frame, but then see that on the hourly the bulls are still in control. It just goes up to make a higher high and triggers us out at a loss. You can see that that actually happened for those people who traded this on Friday. They would have been exasperatingly stopped out of this trade after being triggered in at a loss, even though the trade technical setup is still valid, and we just don't want that to happen. So what we wait for in order to confirm a potential move, bearish pin bar reversal on the daily, is we want a lower high on the hourly. You can see we've got this well established trend line here. All we want is essentially, you see trend lines can be quite subjective. You can see I've already drawn this in several different ways. We can see that there's consolidation here on the hourly, and at the moment it just doesn't know what way it's going to break. Okay, so on one hand it might go upwards, make a higher high and invalidate the technical sell setup on the daily, but if we get a lower high here on the hourly, or indeed this consolidation represents a false breakout to the upside and it comes back down again, and we get the close below this level on the hourly, this trend line, sorry, on the hourly, then that would confirm a move, certainly based on our technical criteria or rules for entry, for an entry on the daily short. So we just need to wait for this to happen. Ideally we'll get a close below this trend line, so if we do place our orders for a short on the daily time frame below the lowest, minus spread minus an extra pip, stop loss above the high of yesterday, plus spread plus an extra pip, then you can reasonably argue that that would be the equivalent of a close below this trend line here. I'd rather have a lower high, quite frankly. So this is essentially the confirmation we look for getting into trades on the daily or on the weekly. We always want time frame correlation if we haven't got any meaningful reversal divergences on the RSI or the stochastic, which we don't have. Okay, so that's what we're looking at on pound CAD. Happy trading.
What do you think of that? Trading does not have to be difficult or time consuming. In fact, all you need to become a profitable lazy trader is a single strategy which you can trade for only minutes a day. Visit thelazytrader.com and download for free 5 rapid ways to become highly profitable at Forex trading and your trade secret video pack so that you can copy the winning elite and rapidly accelerate your long-term success in financial markets trading. Trade profitably from as little as minutes a day and beat the banks and brokers at their own game. This is available for a limited time, so download it today. www.thelazytrader.com. It's free, fun, and most importantly, it will help you. Visit thelazytrader.com.